Hey everyone, it's Monday afternoon around 2 o'clock Central Time. It's been a while since we've done a video, so let's get started by let's do a little recap looking over the last year and what's taken place. This recent low we're showing now as a expanding triangle. We started talking about the expanding triangle in early 2019, and then we were showing how the market was probably still in a correction at the most from this high here, and at the least from this high here, and that how we could see an expanding flat or running flat, or possibly, if from this high here, an expanding triangle. So we were showing that in early 19, and then this move here was 5 waves, and this move actually on a log scale is the same length as the one wave going back to 2009, the intermediate wave 1, and the potential for intermediate wave 5 here was the same. So we changed our count and started trying to track this as the beginning of a larger impulse move starting a correction. And now we can see that didn't play out. We changed when the market rallied and came up past the 78.6% retracement. We stopped trying to count this as an ABC2 wave and went back to the changed this to back to the wave 4 for an expanding triangle. And we're showing the expanding triangle just really because this just looks really pretty. And as we note right here, the last time we saw an expanding triangle this defined was 1966 to 1974, which was cycle wave 4. And there was a really clean expanding triangle during that time frame, a Fibonacci 8 years for that correction, and a Fibonacci 34 years from the 1932 low up to the 1966 top of cycle wave 3. So anyway, that's why we're showing this. But if the high was here, then this is an expanding flat. You can count it either way. Either way looks fine. We just, like we said, we like looking at this expanding triangle because it's so pretty. And we haven't seen one of this magnitude since 1966, 1974. Up here we're showing how, if this wave count's right, we're showing minor wave 1 rally, minor wave 2, minute wave 1, minute wave 2, minute wave 3 just completed, and we're in minute wave 4 now, and we'll go over that in the shorter time frame charts after this. And we still have minor 3, minor 4, minor 5 to complete intermediate 5 of primary 5 of cycle 5 of super cycle 5. And these are the dates from where they started from: 1932, 2000, 1974, 2009, and 2020. And we're also looking at 1932 to 2021. We've been showing this for years, going all the way back to 1987. I was trading on the floor in 87, and we had a 13-year top from the 1974 low, and it turned out to be that the largest one-day decline in history at that time turned out just to be the 4th intermediate, or actually the intermediate wave 4 of primary wave 3, up to the 2000 top, which from 87 to 2000 was another 13 years. And so we've been counting from 1932 to 1989 for a long time, or from 1932 to 2021 is an 89-year Fibonacci time frame. So we've been counting this, looking at it, trying to figure out how we were going to ever get there, and today we're there. And so anyway, that's it. That brings us up to date on what we're doing going back to past year, and how this all counts, and what we're looking at long term here. So here's a SPX chart, 100 minute, and this shows the breakdown of the wave count from the minor wave 4 low, or the intermediate degree fourth wave back here. We have 5 waves up in minor wave 1, ABC minor wave 2, and then when this took place, way back when it happened, we were talking about how after this move here and all of this really became kind of hard to rationalize what this was. Since it broke the 78.6 and it didn't any longer look like the C wave of a correction, with this being A, B, and C, we said at the time it just had to be either minute wave 1 of 3, or it could have been all of wave 3. And then when this move failed to overlap this area here in the SPX, in some markets it did, like I think in the Dow, or I'm not sure about the Dow. I know in the 24-hour futures it did overlap, and we talked about how this could be the clue that this was either 3 or 1 of 3 at that time. Then we came up through this area right here. We showed how this had a 1.618. I think this was the last video we did. We were in this area here. We were looking for a rally to take place, and to either confirm that this was the start of a 3rd wave or a 5th wave. And so this is what's happened since. So if we count this, if we count this as the wave 2 here, we have a minuet wave 1, ABC minuet wave 2, then 5 waves minuet wave 3, ABC here 4, and 5 waves 5. We've just completed the minute wave 3 of minor wave 3. And I wrote this here that wave 3 equals 1.272 times 1. It came real close to it. I don't think it quite touched it. I think it was 4 or 5 points away. Close enough, but didn't touch it. Now the correction that we've gotten so far, the market is this could be counted as a leading diagonal wave 1. We're counting it as a WXY for now. The channel, the 1, 3, and 2 channel line, the market came down and touched it perfectly. It doesn't get any prettier than that. So we have a 4 equals 1. I think touching the line, it was equal to wave 1 in this area right here. And I think the new low on Friday to touch the trend line made it just a little longer than wave 2. Still counts, hasn't overlapped wave 1. And until it does, that's the invalidation. So that's how we're counting it. This turns out to be a leading diagonal. And we rally up to here, we come down, we break this invalidation point, then we could possibly start counting this as a more significant top, and actually the top. And we'll show you how on this chart here, how we look at that. So a lot of traders are asking the question, if there's any way that this could be the top, the 5th wave that we're looking for to finish all of this. And if it is, this is how it has to count. This is the only way it can count. We have to make this the 3rd wave, and if we make this wave 4 here, then all of this that we showed on the other chart is too long and would make the intermediate or the minor degree 3rd wave too short. So by counting this as a W, WXY, X, and an ABC, keeping this ABC because it was so clean, like we say, these kind of patterns, market doesn't do this clean if it doesn't mean something. So sticking with this, we can make this as a wave Y, as a running flat for wave Y, and make our wave 2 right here. And we could actually even count this as we've got it labeled as minute wave 2, but it also, this is how it would have to be for minor degree wave 4. This is the only way we can count it. And then we'd have 5 minute waves instead of minuet waves up to complete minor wave 5. and that's how we'd have to count. Otherwise, this is 3, and even 3, minute wave 3 and minute wave 4 could count this way also. So far we're void of very many relationships in this entire move. They're far and few between, and that's what happens when the Fed decides to tell everybody that they're not going to let the market go down. They're going to keep interest rates at 0 for 5 years and pour any amount of money that they need to prop the market up. This is what happens. We saw this from 2011 to 2015. Counting that entire rally was a nightmare. TARP, QE1, QE2, QE4, and QE infinitive to infinity, and we hoped that it ended in 2016, 2017, 18, but here we are back at it again now, and it really messes up the wave count. Anyway, this is what we're looking at. We're still looking at this as 3. Unless this breaks, the market still hadn't overlapped anything. This lower degree wave 1 or the higher degree wave 1, still trading above it. It doesn't mean that it can't, and if it does, if we get an invalidation of this wave count, then this is what it would turn out to be. So that's it. That's what we're looking at. And if you want to see all the squiggles and wiggles, there it is. This is what it looks like. And you can see these charts on the blog. Just go there and you'll be able to print these charts out or download them, look at them a little bit longer. I'm not going to go in. This is self-explanatory what all these, down to the minor degree, sub-macro degree, the blue, and you can even fit the minuscule degrees in here too. And this is a good way of knowing that you've got it labeled at the right count, because we can't back up any further than this. So, like if we had this at a minor degree, we'd still have little small degrees that we could count. So this is the best way of knowing that you've got the right degree of wave labels in the longer term, which helps you with the longer term degree. So in the Dow still hasn't made a new high, as everybody knows, and the Dow looks like it could have made a failed fifth wave, a truncated fifth wave. Of course, we need a lot more confirmation because, as Elliott said, fifth waves are extremely rare. Although they do happen, we never try to predict one or anything, so we're waiting, and this is another reason why we like this wave count as the primary count, because it seems like the Dow should still make a new high, unless it has created a truncated fifth wave or a fifth wave failure. And the Dow Transportations have made a new high, so if the Dow Jones fails to make a new high, we'll have a Dow theory sell signal, which we do right now for the time being. So anyway, this is everything that we're looking at, and we'll be back a little more timely. Took a lot of time off doing a lot of things. Now the summer's over with, not that it really mattered. It doesn't seem like it ever really started with everything that's going on. So we'll be back as soon as the market confirms one way or the other, either up or down from here. Safe trading.